Bitcoin, where is the pump? Specifically, where is the November pump? That's a question on every crypto enthusiast's mind. November wasn't supposed to be like this. We were supposed to have fireworks. So should we give up on the hope of an end of November pump and accept this bear market? Well, I'm more like Leo in The Revenant. We will fight those nasty bears. So are you ready to fight along with me? Well, turn me off if you aren't, because it's time for Chico Crypto. To begin today, let's try and answer that question. Where is the November pump? Pulling out the Bitcoin price chart, it's been a brutal week and a half. November 10th, we hit our all-time high of just over 69K. But since it's been down, baby, down. We officially lost 60K support on November 18th. And on that same day, we hit the low so far, which was about 55,900. This has been a November dip of nearly 19%. Now, like I showed last week, a November dip isn't out of the ordinary during parabolic bull runs. November of 2017, the price dipped harder than this, from 7,500 down to 5,900, a 21% decrease. There was also a November dip in 2013, from $358 to $313. This was a loss of 12%. So this 19% dip is still in the range of the past two Novembers during a parabolic bull cycle. Although what's different about this one is it's taking a bit longer. The dips back in 17 and 13 and their recoveries happened both in under a week, while this one took over a week, 8 days to reach the low. And as of yesterday, it had been 3 days since the 55.9K low, and we tested the recovery a few times, trying 60K resistance on a few occasions, but we couldn't break it. So it's been 11 days since the high, and we've been in this mini bear market. So it's looking like November isn't going to be that bullish, and Plan B's prediction for November will be fully incorrect. Thus, people are losing faith, and they're losing faith quick. Fear is filling the markets. Pulling out the Crypto Fear and Greed Index chart, fear is here. The index, which tracks confidence in the markets, is dipping into the September levels. Not as steep yet, but another big dip would most likely push us into those higher fear levels for the day.
This is our most desperate hour. Help me, Obi-Wan Kenobi. You're my only hope.
So is there any hope? Well, there is some, and it comes from that Fear and Greed Index. Yesterday, Matthew Hyland at parabolic_Matt on Twitter posted a great set of charts. He said, Bitcoin Fear and Greed indicator on the 3-day time frame is flashing a bullish signal in an area that has resulted in a move upward every single time this entire year. This is the second lowest level of the year. Only the May crash was lower. A bullish move is highly likely. And as we can see from his charts, each time the Fear and Greed Index on the 3-day time frame peaked with fear, it resulted in upwards price movements. This was true every single time in the year. 6 out of 6 times there were bullish movements after the index peaked fear. And this 3-day time frame is the lowest we have seen since May of this year, when BTC had that major crash down to below 30K. And you know what's kind of interesting? The reverse is true when we compare it to the US dollar. The US dollar's Fear and Greed Index over the 3-day time frame is flashing green, greed, and the US dollar is pumping. So, are we about to have a bear reversal for Bitcoin and a bull reversal for the dollar? Well, a wise man once said, buy the fear and sell the greed.
But if you can't get yourself in that mental attitude, you're going to be scared whenever everybody else is scared.
Speaking of fear though, fear of Ethereum from its competitors is hitting all-time highs. I covered some of the drama over the live stream Saturday, going through tweet threads of Avalanche's founder Emin versus Ethereum OGs, and then Su Zhu, VC investor into Avalanche, versus Ethereum DeFi OG Kane Warwick. Things got pretty personal, but I'm not going to go through that old drama once again. Let's go to the new. Although, why all of a sudden are people coming after Ethereum and Ethereum founders who are sticking with ETH and its L2s? Well, just last month in October, a number of representatives from Ethereum 2 client teams took part in a workshop titled Amphora in October. The groups collaborated to carry out a set of development milestones to mimic the ETH2 merge on a test net, effectively serving as a dress rehearsal for the real thing. And it went extremely well. From the Ethereum Foundation blog on it, they said, on the last day of the workshop, minutes before the final dinner was served, milestone number 5, the final one, was hit. A network of 10,000 validators across 100 nodes and several client implementations launched under proof of work, reached the terminal total difficulty, and transitioned to proof of stake and successfully finalized the chain. And then Ben Eddington, lead product owner of Teku, one of the ETH2 clients which was created by Consensus, said this recently in an interview with Cointelegraph. He said, "We are now working towards a public merge testnet called Kintsugi that is planned to go live in early December next month. Kintsugi is intended to implement a release candidate design for the merge, meaning that the technical implementation work is all but done. After that, there is only a process of testing, risk management, and governance required before the merge can happen." So we are on the heels of ETH2. A testnet for it will be released in early December, just weeks away. There will be testing done and risk management, and then the governance required will be initiated to get it to go live. And then we will be live with ETH2 sometime early next year. That means time is running out for the competitor Layer 1s to solidify their place in the crypto markets. As of right now, Layer 1s like Avalanche or Solana are able to provide high TPS and lower fees at the cost of decentralization. But ETH2 and its Layer 2 rollups will be able to provide the same benefits, higher TPS and lower fees, while not sacrificing decentralization. This is scary to the centralized counterparts, and because Ethereum is on its way, they will begin attacking, which has begun. And it keeps on going, even after Saturday, even bringing Solana into the mix. Yesterday, Su Zhu tweeted once again in reply to Kyle Samini saying that Sam Bankman-SBF wasn't a Sol insider. Su Zhu said, "Agreed, Samini pitched Sol to me around the same time he pitched SBF. I 100 IQ'd it as I thought Ethereum would actually scale. Later bought Solana in a SAFT OTC. Market was trading $1.10. SAFT OTC was 20 cents. I later 100 IQ'd again and sold some Sol ETH at 20x, probably the worst decision of 2021. And then he clarified what he meant by the tweet below. And very bullish Sol/ETH and AVAX ETH. So the next question is, should we listen to Su Zhu? Should we be long on Sol and AVAX and short on Ethereum? Well, both Sol and AVAX are carving out their own paths in crypto and gaining users, but at the cost of centralization. Solana is centralized. Avalanche has centralized aspects, and they both are not honest in what they are. They try to sweep their centralized aspects under the rug. If you've watched my channel for any amount of time, I'm a big proponent of decentralization. I can deal with a centralized chain as long as they are honest in their centralization and they have a roadmap to decentralization. So, in my opinion, Avalanche and Solana have seen their pumps due to VCs, but I don't think they can sustain it. If the market still values decentralization, which I still think it does, we haven't lost our core ethos just yet. And these altcoins, which are honest in what they are and are decentralized, may see their respective pumps very soon. Starting with the highest market cap, Polkadot. Why do I like DOT? Well, Polkadot holds decentralization as one of its core ethos. Its validator network is decentralized. Each node has a fair and equal chance of producing a block, and they have plans to grow the number of validators even further, and then further. Also, Polkadot is the project who created the parachain structure. At the core of this structure is Polkadot, which is just a relay chain. The Polkadot core is made up of its validators, and they're there to provide consensus and consensus only by validating the consensus blocks. And this shared security and consensus secures multiple blockchains, aka the parachains. Transactional scalability is achieved by spreading transactions across multiple parallel blockchains. Transactions aren't processed on the relay chain. The consensus of those transactions is only confirmed. And the beauty of this structure, it's infinitely scalable. It doesn't just have to be a single parachain in a slot. Another relay chain can connect to Polkadot with its own parachains, and another relay chain can connect to that relay chain with its own parachains, and so on and so forth. Decentralization and scalability, that's why I like DOT and Kusama. But basically, this is Polkadot's own form of sharding. And there is another project who is moving fast on that front without sacrificing decentralization. That is Near Protocol. Last week, the Near Twitter tweeted, announcement, Near Protocol launched Simple Nightshade sharding onto the mainnet. Learn all about Simple Nightshade sharding Phase 0 and the road towards our infinitely scalable blockchain in the thread below. In that thread, they say, since its inception, Near has been designed to evolve towards a fully sharded blockchain. With the current number of over 300K transactions per day, the network still only uses 13% of its capacity. However, to meet the growing demand as more and more projects start building on Near in the coming months, we deployed Simple Nightshade sharding onto the mainnet today. Simple Nightshade splits the state into 4 shards, effectively scaling the throughput of the network by 4x. Many blockchains and Layer 2 solutions are claiming to have thousands of transactions per second, but eventually all will reach an upper limit due to their non-sharded design. Near's Nightshade sharding allows it to scale linearly with the number of shards. And as we can see, a design of the structure sharding with Near looks very similar to Polkadot's parachain structure. Sharding and parachains are the future, and we here at Chico Crypto are always looking forward. Cheers, viewers. I'll see you next time.